We start today's market talk. Stock markets appear to be doing just about enough to keep investor hope alive. That's it. We are doing only that much nowadays. So I'll show you in terms of data. Friday we saw some gains, uh, but there were declines in the previous sessions of the week. Meant that the index ended virtually flat, and broader basket of Nifty 500 stock also slightly improved their performance on Thursday and Friday. Otherwise, they were beaten down badly during the week. Now, why am I saying why is the market not moving? Because these conditions will have to change for the market to move completely. So, first is the biggest overhang on the sentiment has been tariffs by Mr. Trump. What was initially seen as a negotiation tactic has turned out to be an albatross around India's neck. At 50%, India faces the highest tariffs among all the US trading partners. India and US have been very close to finalizing the trade deal, but the deadline keeps shifting, and this has kept the investors on the edge. So, this thing has to first finish up. Second is India is largely missing out on the AI investment boom. Now, the point is that it is not because there is a enthusiasm all around the world, etc. That's understood. You see, we don't have any set of stocks or any sector where there is going to be 20-25% expected growth for some time. That kind of hope was there with EMS sector, but they have their own set of problems. And moment a stock shows for 30 to 40% growth in one quarter, the stock zooms to 100p, etc., and then it becomes uninvestable. So Nasdaq has rallied more than 16%. Even compared to emerging market peers, Indian equities have underperformed. Due to these reasons, FIs have been consistent net sellers of Indian equities. I'll show you this. So this is the 1 year return in USD terms, MSCI index. India has given around 1% return, while US has given around 14, world 17, and emerging markets are 13. So this people are selling here, moving to emerging markets, etc., where there is money to be made. Now, the other problem is weak rupee has breached the 91 mark against the dollar. Again, it is not stabilizing. So, this is the reason why FIs are reluctant to invest, as in dollar terms, their returns have been abysmal. I showed you around 1%. Rupee has depreciated around 6% in 2025. So, if Nifty has given 7% return, rupee has depreciated 6%. So, simple 1% return. Now, non-deliverable forward market shows that the rupee is expected to weaken to at least 95 to a dollar by end of 2026. Now, non-deliverable forward market is not a small market. It bets on the value of rupee 1 year from now. NDF market is deep and has a large number of participants, which makes it a reliable forecast. So everybody is aware of this data, and that is one of the reasons why rupee is depreciating. 50% tariffs can widen the current account deficit. Capital flows from domestic equity markets may continue, but capital outflows are taking place by the FIs, and flows into debt market have also reduced. In addition, there is FDI which is moving out also. Like Prudential has moved out in terms of that ICICI Prudential AMC. The Prudential has sold out their stake. So that is FDI which is moving out. That has kept the pressure on the rupee alive. Now, FPI flows tend to rise and ebb with a variety of short and long-term factors. But the patient capital in the form of FDI is what could provide some stability. And that was one of the reasons why there was some kind of enthusiasm, positivity on Friday when the news came that Japan's MUFG will be investing around 40,000 crore to pick up a minority stake in Shriram Finance. So that brought some stability and positive sentiment. Then government has allowed 100% FDI in insurance sector, private sector to invest in nuclear power, bilateral trade pact with Oman, and SEBI has made significant changes to stockbroker regulations and mutual fund fees. Now, all these four announcements signal a policy shift towards diversification, structural reforms, and attracting long-term capital. So this is one positive thing, and they have to do all these reforms. Otherwise, things will not improve. Now, if, as I mentioned, the rupee had gone up to 91, and then there was a RBI action, and then rupee has come down to 89.55. So let's see how it plays out from there. But it has to be stable. It cannot be so wild also, because people don't know how to trade in this scenario. Now, the other thing which happened was there was a news on Friday about Bank of Japan raising rates. So they raised this is US dollar, Japanese yen 1 week. So if you see, yen has weakened throughout, and that was the basic of yen carry trade, that you borrow in yen and the yen will keep weakening. You will always make money, and you borrow at less than 1% interest rate, and then the yen weakens. So in whichever currency you borrow, you make money. And what has happened is that though they raised the interest rate and the forward guidance was also hawkish, but the yen still weakened. Though logically, if you raise interest rate, the yen should have strengthened. Why the yen weakened is because Japanese CPI is still at 3%, and their 10-year bond yields is still at only 2%. So the real interest rate remains negative, meaning monetary condition in Japan is still technically accommodative. It's simple. Inflation is 3 and your interest rate is 2%. So that means the real interest rate is negative. That is why the currency still weakened. They have to increase the interest rate at least higher than the inflation rate. Then only it can lead to real positive real interest rate. Now, this is very interesting FIDI data. So if you see FIs, they are net short on index futures. They bought calls and sold puts in index options, generally level. So they bought calls and sold put, means they are turning mildly bullish in terms of positioning. Pros, they are net long in index futures. They bought calls and they are net short in index options. So by holding puts, so they are neutral. Pros are neutral. Now clients, they are long in index futures, but they sold calls. See here, they sold calls in index options and they bought puts. So they are turning strong bearish. While in cash market they bought and FIs also bought. But the interesting part is this set of data. So if you see here, FIs have been buying last 3 days. So this has given some kind of a hope to bulls. Maybe FIs have turned, but this is very small number and most of the FIs are not there only. So very few FIs are there. So who knows who is buying in this in terms of so-called these FIs, right? Maybe this is the Indian money which is Singapore based, etc. And DIs have been constantly buying. The index futures positions of FI is at 1.59 lakh. So this should slightly go up next week and then go down at expiry week. Now here the interesting part comes. In terms of index options, every Friday if you see, FIs turn bullish, right? In terms of buying calls and selling puts every Friday. And if you see, this is where the significant improvement in the Nifty comes. So it became positive. Significant move came on 19th, that is on last Friday, then on 12th December, then on 5th December, and a day before that, they slowly start turning bullish, and then they become negative throughout the week by uh, by by selling options and other activity. So it's a predictable thing. So one doesn't have to, take out too much out of predictable movements. That 0.5% move in Nifty is every Friday taking place just because of FI action, and that is why there is a strong correlation. Now coming to US market gained on Friday. Sentiment improved due to delayed economic data, reinforced expectation of a further rate cut. But if you see, though the bond yields were coming down, they rose on Friday, as higher Japanese rates often result in Japanese investors pulling capital back from US. So that means those who want to put money in the US, they will have to offer higher rates. Dollar also strengthened a bit uh, against other currency, but nothing significant. Gold continues its rally. It's now heading at touching that 4,400 mark and will continue because the QE has started from Fed, etc. So there's a lot of liquidity and central banks are buying this. Similar with silver, it's on a different upward trajectory now, heading 67. So what is happening with silver is that it goes to round numbers. So it headed to 50, consolidated, then quickly went to 55, then it went to 60, then it went to 65, and now I think it'll head to $70 to an ounce. So just remain invested. Copper, nothing much significant. No, nothing much is happening. Bitcoin again consolidated. Nothing significant here. Brent crude is in focus, so it has risen a bit. It had come down to around 58 levels, but it has gone to 60 odd levels because some tensions escalated between US and Venezuela. Uh, Now coming to US indices, uh, and Nasdaq recovered from AI bubble scare on Friday. Micron surged 17% in 2 days due to strong earning. Oracle jumped 7% on news that it would be part of a new joint venture for TikTok's US operations. So all these indices recovered from the lows and ended nearly flat. See, and S&P 500 has shown, Nasdaq again ended flat, but the upward trajectory continues, and Dow corrected also a bit. So nothing significant. Coming to India, uh, so if you see, the VIX has come down to 9.52. That means there is now it is oversold, and there is no people are too complacent, etc. And people are not changing their positions as such in a big way. So uh, there is nothing left in this for option sellers. Nifty 50, if you see on the weekly chart, this is the last high and it has not been able to breach that. It made a small bordered candle with a shadow on either side. A structure that precedes a decisive directional move, but I don't think a big directional move will come immediately. It will come, it will keep remaining in this range. It will come only in the next year. So this 2600, 100. So if you see the daily chart, so it has just remained in this range, take support at 50 EMA at around 25 730 740. So there it goes, and then finds resistance at around 26 100. So till the time 26 100 is not taken out, nothing much will happen. After that, then you may see 26 300 and 26 500, but not this year as such, unless there is a significant news and there is a support at 50 EMA. Now next 50 also, it rose from the lows, but it is consolidating now. Nothing much. Nifty Bank, it showed a doji. So this is a doji. So this is the indecision here, and the reason why it is not moving is because the people are selling off their HDFC Bank and ICICI Bank holding and buying the other shares. So because there is a reconstitution of Nifty Bank which is taking place. Daily chart, if you see, is hovering around 20 EMA, so nothing great here. So 58, 600, 700 is the support. 59, 400, 500 is the resistance. Above that may head to around 60,200, etc. So nothing much here. PSU banks are in momentum above the last breakout point. It had corrected after the news came, and then now again it has got revived. So there is a momentum here. So stay with them. IT again, there is a momentum, though the logic is not understood because the essential guidance was nothing great and the results were nothing great, but some sector has to be played. So there is a momentum here. There is nothing significant with respect to Infosys, etc. Whatever happened on Friday, so don't take any meaning. If it gives a big bounce on Monday, that should be an opportunity to book profits somewhere closer to above 1700 if it goes there. Now the point is that the results are not expected to be good. So there is scope for disappointment is much higher with IT stocks now. Metals again are strong. So this is one more sector which is in momentum. Autos, uh, though they sold off, but they have recovered. So this is another thing which is closer to the all-time high, consolidating here now. The sector which is coming up is pharma. It has bounced from the 20 EMA this week and has come now very close to ending trend line. So this is one sector which should perform well. Defense continues to be weak. It has broken down. It has come taken support now at 50 EMA. It had gone below that, recovered at end of the week, but nothing much out here. Midcaps again. You see, stage a strong recovery from the lows, but and formed that small bodied candles with long lower shadows, indicating buying interest at the lower level, but there is not much of, and it is making lower lows. So if you see every week, it is making lower lows. So the trend is downwards. Similarly, with small cap index, again the same similar pattern, making lower lows and selling off. So the broader market has been selling off because of various reasons of valuations and other issues and lack of interest now. HDFC Bank is consolidating around the 20 EMA. So this is a place where it is consolidating. If it significantly breaks this 980 odd level, then it may head to around 950. But till the time it is here, it is not moving. Reliance again got some momentum this week. It was up 0.5%. So it is above the last breakout point, the medium resistance it was having. So, but it has to need some momentum to head to 1600. This stock it sells off and then recovers because two reasons. What people are expecting is there is going to be a Geo IPO next year in first or second quarter, or that means first in January to March mostly, or April to June quarter. Uh, that before the Geo IPO, there would be a hike in the rates for telecom, and that is what people are expecting. Vedanta is another stock which is in good momentum. They got the approval for demerger, and that has kept the stock excited. I think it will head higher because the SOTP valuations are pretty higher, 650 plus. So it was slightly overbought. So it consolidated a bit, but every dip is a buying opportunity here. Now I'll discuss the Biosecure Act and its implications. Now on 18 December, the act was signed into law as part of FY26 National Defense Authorization Act NDAA. US companies have only 5 to 7 year window up to 2032 to decouple their existing supply chains from Chinese companies of concern. This timeline, so it is not happening tomorrow, firstly. This timeline gives Indian CDMOs, contract development and manufacturing organizations, enough time to build the massive capacity needed to absorb the shifted business. Just the just to understand the scale, our complete CDMO market cap is below one Chinese company market cap. So you can understand the scale or capacity wise where we are. US pharma companies are already issuing requests for proposal RFPs to Indian firms. Experts believe the tangible impact on companies' P&Ls will begin showing in late 2026 to 27 as it takes 18 to 24 months to validate new manufacturing sites. Now, Divis is the primary beneficiary because it already works with 12 of the top 20 global innovators. These innovators are the most exposed to US federal funding and are the first to shift. Now, Divis has massive existing footprint in India, allows it to plug and play new projects much faster than smaller competitors. Scale is what helps the Divis. Now, what Divis has done is with Unit 1 Telangana receiving a clean US FDA report in late 2025, Divis emphasize that they have de-risked their largest capacity. So that means there is no scare of a FDA inspection. So the chances of getting new projects are much higher. Their new peptide center of excellence will shift. Will it will work very well if there is a shift in global demand. Noting that high margin complex chemistry is where the Chinese competition like Wu Zi was strongest and where the vacuum is now the largest. So this is where the global demand should shift. A significant portion of the business being moved out of China involves complex peptides. Now, this peptides are the in thing. Newland's newest investment in is in its peptide center of excellence, aligns perfectly with its specific outflow. For Newland, the impact is visible in their CMS. Newland is known for custom manufacturing solutions pipeline, which grew significantly in Q2 FY26. US biotechs are migrating to Newland because they don't have to worry about their manufacturer becoming their competitor, a common fare with Chinese and some large Indian conglomerates. Both companies have recently upsized their peptide manufacturing blocks. This is because a massive portion of the 126H listed Chinese firms' portfolios involves complex peptides. Now, what is 1260H list is a roster of Chinese military companies maintained by US Department of Defense. Biosecure Act prohibits US government agencies from contracting with any company that use equipment or service from 1260H listed biotech firms. So this is the reason. Now, why peptides are important is because peptides are smaller than proteins. They can often penetrate the skin or cell membranes more easily, making them incredibly effective as both medicines and skincare ingredients. So, global peptide therapeutic market is expected to exceed 75 billion by 2030, driven largely by the massive demand for weight loss drugs and anti-aging therapies. So GLP-1 and anti-aging, that is skincare, are the two of the biggest things where the peptide market is there. Primary risk to these CDMO stocks in India, it isn't that the business is not coming in. It is whether the current high valuations have already priced the next 3 years of growth. So that is where one has to be careful. Now, just for context, CDMO market in India is 7 billion USD. It is expected to become 3x, that is around 20 billion by 2030. CRDMO can become 3 to 4x in the next 5 years. So, this is a big opportunity. Now, relatively, Divis have done capex of around 2000 crore to prepare for this kind of a requirement, and Newland is doing around 340 crore capex. Key facility status: Unit 3 Kakinada is fully operational, playing a role in backward integration. There, Unit 3 Telangana expansion completed in August 25. So, and Unit 1 peptide expansion in progress. So, these companies have been preparing for this Biosecure Act. Order pipeline: three major global contracts signed with 12 to 24 months ramp up, focus on contrast media and peptides. 97 CMS molecules, 19 commercial, 12 in phase 3 pre-regulation, record commercial CMS revenue in Q2. Capacity utilization 80 to 80%, 82%, so healthy room for new biosecure volumes. So they can take on more orders. 88% units are running tight for Newland. Expansion is critical for new orders, so they are doing capex. Strategic focus: it's a scale play, capturing high volume shift from Chinese giants, that is Divis. Newland is a niche play, capturing early stage biotech and complex peptide shifts. Net debt position: no debt for Divis. Cash rich, 3450 crore of cash last quarter. Net cash, it has turned positive in late 2025 and has 7 crore cash. So you can see how the companies are working hard. Now, in detail, I'll talk about Divis. Leading manufacturer of APIs, intermediates, and registered starting material, offering high quality products with the highest level of compliance and integrity to over 95 countries. Two complementary business segments: generic APIs and custom synthesis of APIs and intermediates. The crux of its financial engine lies in its custom synthesis segment, where it forms strategic alliances with global pharma giants offering end-to-end solution from drug discovery to commercialization. It's a key partner for Big Pharma with 12 of the top 20 global innovators associated with them for over a decade. Biosecure Act targeting Chinese biotech firms are expected to shift more custom manufacturing contract towards reliable Indian partners like Divis. Custom synthesis segment hits record revenue and now makes up 56% of the product mix with highest engagement and several projects moving through development. Generics business saw stable volumes but continued to face strong pricing pressure with managing stabilization only over the next few quarters. It's ramping up investments and developments in peptides, targeting leadership in complex peptide manufacturing, but not pursuing generic peptides APIs. Exports are around 90% of the total sales, with Europe and US contributing 74%. So if you see last quarter's earnings, they were up 16% in terms of revenue year on year. EBITDA was up 24%. The margins improved by 208 basis points. Profit after tax was up 35%. Profit margins also improved. So custom synthesis revenue is up 28% and 21% Q on Q. Generic business was generally flat, and they are doing around 2,000 crore capex. They are doing well. Now coming to their future projections, FY26 they are expected to do around 11,650 crore and FY27 around 13,100 or 200 crores of sales. EBITDA is improving, EBITDA percentage, EBITDA margins are improving. Now, so the profits will also go up. It is expected to do around 104 rupees EPS in FY26 and 120 odd in FY27. So considering that it's at around 50, 52p for forward, so slightly expensive, but that has been priced in. Now, this stock has been consolidating in this range of 5,500 and 7,000. So it has been going up and down. And it saw a spike after this Biosecure Act was put into place with high volumes on Friday. It went up to 6,600. I told you on open from 6,400, it went to one candle, 5 minutes candle, it went to 6,600 and then corrected. So profit booking would have come. But every dip is a buying opportunity here if you can hold this stock for long term. Next is Neuland. It has undergone a massive transformation from a generic API manufacturer to a high-margin custom manufacturing solution CMS powerhouse. It is engaged in the development and manufacturing of APIs, advanced intermediates, and custom synthesis services. Company operates three CGMP compliant US FDA approved manufacturing facilities. CGMP is current good manufacturing practice. That means it has been inspected by the FDA, so they have no problem. Supporting pharmaceutical development from clinical stages through to commercial production and genericization. It serves over 80 countries with export revenue making up 82% of its total revenue, primarily from the US and Europe, which account for more than 89% of the total exports. CMS business is expected to grow 2.6x over next 3 years. It is anchored by key products such as bempedoic acid and xanomeline. Now, bempedoic acid is used for cholesterol, high cholesterol, and xanomeline helps to control central nervous system disorders like schizophrenia. With further upside from two new molecules under development, the pipeline is robust with 97 molecules across various stages, including 19 already in the commercial phase. It is focusing on peptide APIs, building a commercial scale peptide manufacturing facility at a capex of 250 crore. So if you see the revenues, in this quarter the revenue was up 63%, EBITDA was up 138%, EBITDA margins improved nearly 10%. PAT became 3x. EPS also was nearly 3x. So they performed very well in this quarter. So to see, Now, over a period of time, the CMS and specialty is the major part of their revenue now, and the lower margin that other part of the businesses, prime and others, they have reduced uh, the revenues from them. So they are focusing on them, and so this is how their top 10 and top 5 products are uh, working out for them, and top 5 and top 10 commerce customers also. So they are working well with the niche products. Now, if you see FY26, they are expected to do a revenue growth of around 33% and around 31% next year. So they are expected to do around 1972 crores in this year and around 2600 crores in FY27 with a profit of 355 crore. So profit growth is expected to be double from FY25 and will improve another 50 odd percent in FY27, and EPS of around 277 uh, this year, and 438 is expected FY27. But you'll have to see this because these things are very volatile, and you can't just get carried away. So EBITDA margins are expected to improve. Profit margins are improving as they are getting into higher margin businesses, strong revenue growth, as they are doing a lot of capex. Projections, we'll have to see how they will have to watch as to who is doing what capex, who is getting what orders, who is doing what kind of tying up, and strong profit growth is expected. ROE is expected to improve. So if you see this stock, it has been in this range of 10,000 to 17, 18,000, very volatile. Now, if you see here, November they got their earnings. The stock went up to, after this spectacular results, stock went up to nearly 20,000 and has now corrected to 16,000. So very volatile. So best is to buy it at dips, but then problem is that if you buy it at too high, it becomes very difficult to average this because the stock is a expensive stock in terms of the price. So one has to be careful while buying it. The best is to buy it at around this 15,500 odd levels, where the 100 EMA should provide some support, but they become very vulnerable to news. RSI has been coming down, so there has been some selling pressure, but that selling pressure has been there in all small caps. So I have finished. We will take questions now.